Welcome back to this discussion on the Reserve Bank's monetary policy that did not deliver an expected rate hike but changed the policy stance from neutral to calibrated tightening. The markets were taken by surprise. The rupee market sold off, and then late intervention probably reduced the fall in the currency. The stock market sold off also because of the Reserve Bank promising more rules to ensure that asset liability mismatches of NBFCs are streamlined. So more regulations expected on NBFCs. Sum total, with the rupee as well falling, the stock markets took a bad knock. Bonds, however, saw some bit of a rally, with the 10-year ending at 8.04. Well, I've been speaking with economist Pranjal Bhandari, the head of Treasury at ICICI, B. Prasanna, and the Managing Director of State Bank of India, Mr. P.K. Gupta. Well, Pranjal, the inflation forecast, according to the Monetary Policy Report, the MPR, is based on crude at 80 and rupee at 72.5. What is your own forecast? Do you think that there will be an overshoot of the Reserve Bank's forecast? And how many hikes are you penciling in?
Well, honestly, I think it's only a matter of time before the RBI hikes rates, and I think the change in stance makes that very clear. One other reason it did not hike rates today was its thinking around growth. For the first time, I saw the governor starting a press conference with 2 to 3 minutes dedicated to global growth, how it is slowing and so on. And also the statement makes it very clear that they are much less optimistic about investment cycle picking up than before. Now that they've already given 2 rate hikes back to back, they can take a break from a rate hike. Okay. So I think it's just a break at this point. It's only a matter of time that they hike again. But coming to your inflation forecast, for FY20, the RBI has inflation forecast at 4.7. We think it's going to be 5.1. Even for the fourth quarter, our forecasts are higher than the RBI's at this point. And it's on the back of the fact that, the rupee depreciation, oil prices, and all of that are likely to impact headline inflation. I think what the RBI is assuming is that food disinflation continues for very long. They're expecting almost no impact from MSP.
So how many hikes would you pencil in?
We're expecting slightly higher impact than them.
How many hikes would you pencil in?
So we have 2 rate hikes. Okay. We had that before. 2 rate hikes, 25 bips each. One for December, the next policy meeting, and the other one for the first quarter of next year. Okay.
Well, Prasanna, bond markets. We saw, of course, today a fairly decent rally from 8.14 before the policy to a finishing number of 8.0203. Do you think this rally can continue, or will it give away some of it?
So I think the rally today was a big relief rally. Market were pricing in between 25 and 50 basis points. There were people who were actually suspecting that there could be a 50, and there were people, mostly there was an unanimous opinion that there would be a 25 basis points. So from that position, from that perspective, there hardly any position that was really taken by traders going into the market. And there were short positions which got covered post the policy. So the rally was a reflection of that. And so having said that, I think one important thing which is possibly outcome of this policy is it is quite possible that the direct link between dollar rupee and the bond prices opening every day is possibly broken for the time being, because of the admission by the RBI that they are really not going to be really as worried about currency depreciation and using interest rates to defend that. So that everyday linkage which was happening between the currency and the bond market might actually get broken a little. So to my mind, there are, of course, you need to be looking at factors on a daily basis, like how global bond yields are going. As we speak, US bond yields have already crossed 320. We also need to look at the strength of the dollar against the other currencies. There are a lot of such factors which were going on. So I would say that a range of between 790 to 820 is a fair range going forward into this quarter. And I'm giving a 790 on the downside also because of the fact that the Reserve Bank has announced the open market purchase calendar for the rest of the month. And there are expectations, like I told you earlier, that much more liquidity is needed to be infused by the Reserve Bank going into November and December. So since they have already shown us the way in October, there is some expectation that they would continue with that way in November and December as well, especially because the CIC leakage is quite higher in this season. So from that perspective, the demand supply of government bonds look a little better with RBI doing these open market purchases. So I think we would look at a range between 790 and 820.
But before you finish that answer, what are you expecting on the currency, and do you think the Reserve Bank will bleed more to keep the currency too volatile?
So Lata, the currency argument is a little bit more complex. So like I was alluding to in my reply to your first question, so I think globally investors were factoring in a rate hike. Also because there were other central banks, even within emerging market Asia, who had actually hiked substantially more than what India had hiked. So to some extent, there could be a feeling that RBI is getting behind the curve as far as interest rate hikes are concerned. Doing a 25 today would have been the best par for the course in terms of being abreast with what the global central banks are doing. So from that perspective, I think the currency market is a little disappointed in the sense that the hike didn't come through. So it's quite, and it seems that Reserve Bank seems comfortable with the current levels of the rupee, though I do feel that they defended the rupee in the evening session today. So putting all this into a short story, I would say that I think it's possible for the rupee to depreciate, dollar to appreciate a little bit more to the region of 74.5 to 75 if oil and other variables were to continue to be adverse to India.
Okay. Well, the Reserve Bank may not be wearing the financial stability hat, but SBI always has stepped in. Mr. Gupta, you wear that financial stability hat and tell us there is a dislocation in the debt market. Where is the debt market today after the policy?
No, I think the correction happened mainly because the market had priced in. But I don't think anybody in the market is really looking at a very deep correction. As Prasanna said, that it might go to 790, it may not go there at all actually. But I think 790 to 820 looks like a very fair range. And as the governor said that, any further moves on the interest rates are going to be only up. There is going to be no down move actually.
No,
I think
my question to you, sir,
820 looks like the range on the 10-year bond.
No, my pointed question, sir, is that, do you think that the money markets not funding NBFCs, and especially probably some housing NBFCs, that dislocation, has it gotten any worse or any better? Basically, as a debt market watcher, what do you feel after the policy?
See, as far as the debt market is concerned, for the purpose of NBFC funding, so as I think we discussed a few days back also, for the banks, whatever proposals come, we do the funding.
Okay.
But, and the Deputy Governor also mentioned that the NBFCs have a capital adequacy ratio requirement which is much higher than the banks. They are at 15%.
Yes.
But, even though probably they have the capital, but many of them probably have been running huge mismatches. All their long-term loans have been funded by the short-term loans. So obviously, there has to be some limit to it, and their ability to refinance again and again. And obviously, they can't grow at the rate at which they have been growing. I think one major takeaway from this is that NBFCs cannot grow their long-term book by just taking short-term funding from the market.
I can see a big smile on your face. Therefore, the field is a little more open to those of you who have excellent liabilities, and two of those bankers are with me in the panel today. Mr. Gupta, Prasanna, Pranjal Bhandari, thank you very much for what has been a very enriching conversation. Well, that's the word from the Reserve Bank. Status quo policy, but stands clearly saying that it's going to be calibrated tightening. That makes the future policies very interesting. Thank you very much for watching this conversation.